Welcome to all of you, my friends and colleagues. So glad to have you here. We're doing we have sponsored a number of these webinars and seminars. Gosh, over the last 2 years, we've probably done 15 to 20. And the foundation is sponsoring this one today on understanding clergy taxes. And we've continued to try to find out what topics are of interest, because we're here to support and serve you as leaders in the church, and we want to provide you with education and information about things that are relevant and things that you might be struggling with. So I think we hit a nerve when we started talking about taxes and the clergy tax situation, which is somewhat complicated. And so we're glad that you're here. We hope that you'll continue to attend our webinars and seminars when we get to a point where we can do those again. So I'm just really happy we had, as I said, I think we hit a nerve with this topic. Continue to let us know what you want for us to provide to you, and we'll do our best. We've been very fortunate having some very gifted and generous speakers like the two that we're having today, and just are very thankful. We had 63 to sign up today, so very thankful for you who are in attendance. I'd like to start us off right, in the right mindset. I'm going to ask our DS, Mike Pearson, to lead us in prayer, please.
All right, well, let us pray together. Father, I'm so thankful for the promises that you give us, that reminders that you own the cattle on 1,000 hills, a way of sharing that you are the author and supplier of all resources, and the guarantee that you supply our needs. And so we come to this place today. I thank you for this gathering of your people, that we may understand our own responsibilities in honoring, as you did, Lord Jesus, when you said, give to Caesar what is Caesar and give to God what is God's. And that's what we're here about. I pray over the speakers and those who are providing us with the information that we need to honor you, and to do so in a way that gives you honor and brings glory to your name. Thank you for this time today, and we give you the thanks in Christ's name. Amen.
Amen. Thank you so much, Mike. I really appreciate it. Well, I want to introduce, first of all, Ken Sloane, Dr. Ken Sloane. He is the Director of Stewardship and Generosity at the General Board of Discipleship. I've known Ken for quite some time. He's actually a clergy member of the Greater New Jersey Conference. He was in ministry for 20 years and has been with the General Board of Discipleship for quite some time now, providing wonderful information online, as well as doing presentations for folks like us. And we're just very thankful for Ken. He does a great job. We also are going to have Don Joyner join us, and Ken's going to introduce him. I would like to say that we sent out a packet if you would like to take notes during the presentation. If you did not receive a packet, if you want and would like one, it's just basically a copy of the slides. If you'll put that in the chat bar as well, and we'll make sure that you get one. So Ken, we're so thankful for you and just glad to have you here.
Great to be with everybody today, and thank you for the invitation. Appreciate everybody being on. As Terry has said, I'm in my 11th year at discipleship, working in the area of stewardship. When I came into that position, my mentor right out of the gate was Don Joyner, who has been on staff at discipleship for about 35 years. And one day Don and I kind of had this idea about the kind of questions people had about clergy taxes, and said, well, you know, would we be able to do a webinar about this? Would you be willing to work with me on this? And we've done it every year and have had great response. And this is the first year where I think we're almost doing like a tour of it around different conferences. We have smaller groups that we're able to get to more questions, which is wonderful. So thanks to Terry and Andrea for giving us this opportunity. I'm going to take a minute to get some slides up. And I'm, as I was saying earlier, I'm going to try and not talk quite so much, but let Don kind of do the leadership of this. So let me share my screen and get these slides going the way they should. And again, we kind of appreciate being here. Don will kind of give you more of the detail about the uniqueness of the clergy tax situation, and how often we find folks saying to us a number of things about that they've tried to get some help with their taxes, but professional tax preparers know taxes for the general population, but don't understand the uniqueness of clergy taxes and the kind of laws and opportunities that we have in that role as clergy. And so it's great that we actually have someone here who can kind of lead us in that. I always like to say at the beginning of webinars that my work happens because of your church's faithful support of the World Service Fund. And because of that, I am available to you and to your churches in any way that I can be a resource. And I want you to have my email address, as well as knowing that we have a lot of resources on our Facebook page that you can access at umcdiscipleship.org/stewardship. And also we have a stewardship Facebook page, which you can find on Facebook and Twitter as well. But that will, if you follow me on Twitter, it will not impact your life dramatically, because it's I don't tweet a whole lot. But anyway, I just wanted to kind of mention that, and I will hopefully we'll have a minute. I'll put my email address up again near the end. Terry mentioned about the fact that we had some handouts that I believe were emailed to you with a reminder this morning. We've also, over the years that we've done this, curated some of these questions that Don has answered and provided answers for. And so we try to kind of bring this all together in a document. This is about 11 pages, I think, now. And it's broken down under topics so that we can help people find answers to questions a little easier. And you should have gotten a copy of this. And if you didn't, Andrea can provide that to you as well. And we will be updating it with some of the questions we've received this year as well. So again, let me just take a moment to thank Don. Don is in the retired relationship now. He's a member of the Michigan Annual Conference. Again, after 35 faithful years at discipleship, as retired, but is willing to continue to do these with me, which is a wonderful gift. He is a certified financial planner, also a clergy tax preparer, has been doing this for years. In January, he does special training to make sure that he's up to date on new changes and new laws. And so he has become this invaluable resource. I don't know when he gets tired of talking to me what we're going to do about this, but it's going to be a sad day, but I'm so glad that he's willing to continue to do this and to share his wisdom with us. And so I'm going to move us to our first slide. And what we're going to do, I think, in the organization of the webinar is Don's going to talk about in the early part of this about some of the things that are relatively new in the tax process, and just kind of update us or remind us about those. And then at midpoint, we'll talk a little bit more about application, about what are some of the ways that these laws can apply to how clergy can better position themselves in terms of their taxes and how much they have to pay, and also ways in which you can kind of prepare yourself better for retirement by choosing some of those options that are available. So it'll be kind of in two parts that we'll be doing that. But first, Don's going to lead us in kind of updating us on what's happening now and where we are in that process. So I'm going to move ahead and turn it over to Don.
Thank you, Ken. And I look forward to doing these webinars. I got involved in clergy taxes back when I was a young pastor in a small church, and we had my in-laws CPA doing our taxes. We came back from vacation and found that we owed more taxes than I made in the year. And I said, this isn't right. So I started studying it up, did our taxes, and redid what the CPA did, and ended up the IRS owed me money. So I really have expanded that. Like Ken said, I'm a certified financial planner. I do about 200 income taxes a year. In fact, I did 4 yesterday. No, by far the majority are clergy, because it is so different than anybody else. So I see this as a ministry. And so I'm glad in that light to be able to do this today. I think the first thing we want to say is that most everyone received, I think it was back in May, a third stimulus check. Should have been $1,400 per person. That check and that money is not taxable, but you have to report it. So make sure that that you don't skip that. If you received less than the $1,400 per person, and you qualified for more, for the $1,400, then you may get a credit on your tax return. If you receive the $1,400 and you should not have, because your income was too high, you do not have to pay tax on it, but you need to report it so that otherwise, you know, the IRS is so far behind. Last I heard, they're still trying to process 2020 tax returns, where there are more than 5 million returns that people are still waiting. So if you don't include it, then they'll throw it out and send it back to you. So make sure that you report whatever you received from that one, the last check that you received. Okay. I was interested when I attended a tax seminar training in January, how much changes there were to the tax return for this year. And most of them may not apply to us, but there were a lot of changes. What are the things that is different and important to remember? If you itemize, they reinstate the mortgage insurance premium. So if you're paying an insurance premium because you didn't have enough percentage of down payment for your mortgage and you're paying insurance premium, that is deductible on Schedule A if you use Schedule A. As I will say several times, most people will not use Schedule A. They also reinstated the medical expense deduction. It used to be 10%. It was changed last year to 7.5%. What that means is you can deduct on Schedule A anything over 7.5% of your adjusted gross income as a medical expense. You could also, if you have tuition and related expenses, you can deduct that even if you don't itemize. So make sure if you or your children have those expenses. Housing is not a related expense for college, but food, books, which are really expensive, fees are all deductible. So you may want to look at that. Also changed last year was that the required minimum distribution from a retirement plan, including IRAs, used to be once you were 70 and a half, you had to start taking your minimum distribution. That was changed last year. So now it's up to 72. They will continue to increase that periodically. So keep an eye on that. But once you reach age 72, you have to start taking your required minimum distribution. All right, next. One of the things that really changed in 2020 was they eliminated the personal exemption and drastically increased the standard deduction. Because of that, most people today will not itemize. But I always want people to give me all the information so that I can see whether it counts or not. The standard deduction for couples is $25,100 plus $1,350 for each person over 65 on that return. Singles are $12,550. And if you're over 65, it's an additional $1,700. And head of household, you can see there. That means everything on a Schedule A, when we call it a standard deduction, that's what this means. Everything that's listed. Primarily what, very few people have enough medical deductions on Schedule A. That includes insurance, out-of-pocket expenses, prescriptions, everything, dental, all that would be included. Very few people will have much to declare there. Primarily, it's sales tax or income tax from the state, property tax, mortgage interest, and charity. Those are the primary things that will be listed. Now the standard deduction is going to cover all of that, and probably for most people, not give enough time to itemize.
Yeah, I was just going to offer in there too that I had a pastor who was in preparation before our webinar on Monday, who wrote me and said, well, I've been told that since most of our folks won't itemize deductions, that we don't need to provide people with a statement of their giving anymore because they don't itemize. And so, of course, I wrote back to them and said, there's a couple of reasons why you do have to provide it. One, because the IRS requires that anybody who gives more than $250 to your church needs to get a written acknowledgement of it. Secondly, you don't know where else your folks may have deductions that will take them over that limit, and that they may be giving $20 a week to your church, but they may have given $10,000 to their alma mater. So those reports are important for them to do their taxes and determine whether or not they are going to be using the standard deduction or whether they're going to have expenses that go over that. So again, it doesn't minimize our need to acknowledge what people give, even if they can't itemize.
In addition, part of the CARES Act has now changed for this tax return for this past year. If you do not itemize, you're allowed $300 a person, up to $600 for a couple, to deduct from your income. And there's a place to do that. I'm not remembering which line item, but make sure you don't forget it. So that could be $600 more on top of the standard deduction. One of the changes probably won't affect too many of us is that the mortgage interest deduction to a mortgage that's $750,000 or less for primary residence and a second home. the primary residence property tax, as well as state income tax and sales tax deduction, is limited to $10,000. That really hits primarily the two coasts, the West Coast and the East Coast. I don't find that it hits too much here, but that means if you have a total of property tax, state income tax, and sales tax deduction above 10,000, you're limited to a deduction on Schedule A of $10,000. Also, the moving expense deduction has been eliminated. If a church is paying or the conference is paying for your moving, when you move from one church to another, they need to give you a 1099 or include that in your W-2 for the moving expense. There's no place that you can deduct that, but include the moving expense as part of your housing allowance. So don't lose that particular opportunity. Every clergy has business deductions. Previously, you listed those on the miscellaneous section of your Schedule A, and you can deduct your expenses above 2% of your adjusted gross income. All deductions for employee business expenses, tax preparation fees, safety deposit fees, brokerage fees, all of those have been eliminated as a deduction on Schedule A. Remember that the money that we receive from a local church is classified as employee. So if you have expenses as an employee, it's no longer deducted on Schedule A. I do have a way to deduct it later on. We'll make sure we'll talk about that. Here's a question that comes up for not just clergy, but for lay people with this COVID situation. The COVID situation, we, more and more of us are working totally at home. There is no deduction for a home office for anybody. So if you had equipment, if you had paper, anything, you need to make sure that that's part of your accountable reimbursement plan. And the church reimburses you. But for office in the home, you cannot make any deduction for that. You could use any of these expenses as a deduction when you file your self-employment tax, which we'll talk about in some complete later on. Child tax credit is one of those that is really going to mess up almost everybody this year that has children under 17 and under. They changed the child tax credit. Used to be $2,000 per child. Last year it was changed to $3,600 per child, 5 and under, and $3,000 for children age 6 to 17. The 17 is new. It used to be it had to be under 17, but they included age 17. And this is whatever their age is by December 31st at the end of the year. Now, starting in July, they started making advance payments, sending out checks to people for each child, ages 5 and younger, $300 a month. Children age 6 to 17, they started $250 a month. Unless you opted out, you got that money. The problem is you may have been counting on child tax credit to reduce the taxes that you have to pay. You have to report the money that they sent you. new record that I got says every person, and I say that as person because if you're married, then the husband and wife will each get a letter numbered 6419. That letter will say how much they actually prepaid you under the child tax credit, and you have to report that. It will again slow down and mess up your return unless you report that on your return this year. Generally speaking, there are 7 tax brackets as listed. Most of us will find that we're in a 12% tax bracket. That means everything that we have as taxable income, not all your income, taxable income up to $81,050 on a married filing jointly return. Anything below that will be taxed at 12%. Any taxable income above that amount will be taxed at 22%, or in case you have a lot of income, those other brackets. But for most of us, anything up to $81,050 on a joint return will be charged 12%. Singles, you can see there, heads of household, and the 22% bracket be above those amounts. Some other changes. Most estates are exempt from the estate tax. I think the federal exemption for estate tax is anything below $11 million is exempt from paying estate tax. Most states, and I don't know about Alabama or Florida, there is no state estate tax. So most states will be exempt. They're going to look at that again. Prior to the changes a couple of years ago, it was only estates above 3.5 million were taxed. Other news is that there's no longer a mandate for health insurance. So, but if you are you're receiving credit for your health insurance premium on a federal, they'll give you a 1095-A. You need to report that to make sure that you qualify, but you don't have to say whether or not you had health insurance. Clergy taxes and your finances are unique, and that's the problem we find with most people that are doing income taxes or finances for clergy. I do both clergy and lay finances. And what I say sometimes to lay people are completely different than what I say to clergy. The reasons there are changes, one is that clergy have a limited income. If I'm talking to laypersons and we need to find some way, I can say to them, get a second job. I can't say that to clergy. So we have limited income. Other income that we receive for weddings, funerals, speaking engagements, writing, may be subject to self-employment income. So what you get from the church and other income is subject to self-employment. Self-employment means that we pay basically twice as much into Social Security and Medicare taxes, because as an employee, half of what you send in gets paid by the employer. For clergy, you are self-employed for self-employment tax. So we are an employee. All the money you get from the church, you're considered an employee, but the employer can't pay your Social Security tax. And then for any other income and as well for self-employment tax, we are self-employed. Also, it's different because of the itinerancy. We tend to move. We don't stay in one job for our entire life. Also, spouses' job possibilities are challenged. Whenever we move and it's a ways away from where we were, oftentimes our spouse has to quit a job, change a job, not work. It's really challenging.
Don, I'm going to ask you a quick question based on the previous slide that I didn't notice down here in the chat window. But basically, when we talk about the brackets that you were talking about, the question was, are the brackets based on gross income or adjusted income? And then the follow-up was, is housing included in that?
Housing is not included in that, but that's taxable income, all of those brackets.
Okay.
It's after adjusted gross income, then you take your standard deduction and any other deductions from adjusted gross income to get taxable income, and that's brackets. Good. All right, we're also different because we have a limited investment for housing. Most laypersons are in one house their entire lifetime, and by the time they retire, the house is paid for. Most clergy are in a situation where either because we're moving or because there are parsonages, it's not till we retire that we begin to have our own. Also, it's different because any gifts that we get from the church are taxable income to us. This is an argument we have all the time. In fact, my son, who is a pastor here in Tennessee, talked with me yesterday because their church has been giving money to an individual who basically, because of illness, is no longer a member of the church staff, but those gifts that they're still giving are taxable income. It's sad to say. So anytime that we get money from somebody because we are the pastor, because we did a funeral, because we did a wedding, whatever, if a gift from an individual because we are the pastor is taxable income, even if it goes through the church. And oftentimes clergy will get, the church will collect gifts from individuals and pay it out to the pastor at Christmas time. That is taxable income.
Don,
Yes.
can I ask a question? I had a situation, a pastor who is receiving end of the year gifts from his church and would like to use those funds to set up a donor advised fund with the foundation. Is there any other way that the church can set up a tax-free charitable trust such as that?
I don't know that I have an answer for that. I
didn't either.
I don't think so. I mean, if money is given to a person, there's a taxable situation. Now, if individual people are just sending a person gift, pastor, pastor, I love you, here's $25. Technically, that would not be taxable income.
Okay.
Individuals sending money in to a donor advised fund, would not be a taxable event. If through a person, it's going to be a taxable event.
Right. Thank you.
Also, that's different for clergy is that clergy should be making estimated tax payments instead of withholding. We do have cases in which the churches are withholding, and technically they could withhold only if it's applied to the federal taxes, not Social Security, Medicare, whatever. So that's different because most people rely on their employer withholding, and then at the end of the year in the tax time, they'll get a refund. Most clergy don't get refunds.
Yeah, and I just want to call to attention the first two on this page, because especially if you work with younger pastors or, you know, clergy who are new to the ministry and are often told by their churches, well, you get free housing. You know, we don't pay you a lot of salary, but you get free housing. And it's just important for young clergy to remember this reality is that when you are in your own home, in many ways, that's a savings account. And Don and I could both have had the opportunity working at an agency to be in our own house and to know that has the value of that. But then the also part that people don't understand in local church is that that the parsonage, that clergy are responsible for, when it comes to self-employment tax, for including a value of the parsonage as well. So they need to know that's money that I'm taxed on, and it's also you know, that living in a parsonage, I am not having the kind of equity growth that most of their members have by living in their own home. So if you are around younger clergy or people who are new to the ministry, they just need to be aware of that. They need to keep that in mind as they go through their careers, because I'm sure all of us who are later in ministry know folks who get to that point and do not have that asset as they move into retirement.
Right. So when you do your strategic tax planning, begin with your compensation plan. That's the amount of money that the church is going to set aside to pay you to be the pastor. That must be in place before you receive your pay. Typically, you're going to do this at a charge conference, and the amount that is set up at that, the bottom line can't be changed. I'll talk about changing, possible changing some of the other way it's divided. Part of that is that every clergy can have a housing allowance. Even if you're not living in your own house, you can still have a housing allowance. It's part of your compensation plan. You reduce the top line by that amount. And I'd like to say everything that you spend on housing is part of your housing allowance out of your personal pocket, except, and we'll talk about that later when we point out the IRS code, except food and maid service. You cannot pay someone to clean the inside of your house. You can pay somebody to do your lawn, your shrubs, but not inside. So every penny you spend, cleaning supplies, I like to say even toilet paper, you buy a new TV for the Super Bowl. All of those things are included in your housing allowance. If you move and someone has paid your moving expenses and you get 1099 saying you got to pay tax on it, that's part of your housing allowance. So look to include as much as you possibly can in that housing allowance. Also, everyone can make contributions to the pension plan through UMPIP and WestPath. That amount of money can make a huge difference, both in how much taxes you pay now and a bigger difference when you get to that point of retirement and start drawing on those funds, as I can attribute to. Also, everyone has business expenses. You should set up an accountable reimbursement plan An accountable reimbursement plan is part of the church's budget. It's not part of your compensation plan. Be careful. It is, you do not want to reduce your compensation to pay business expenses. An accountable reimbursement plan is something that the local church set up to reimburse you for business expenses. But even beyond that, there's expenses that you may not turn in. What I suggest is that you sit down with the staff parish committee or the finance committee, or at minimum, the treasurer, to define what you can be reimbursed for out of that account. Beyond that, there's always expenses that you may choose, or the church decides we're not going to reimburse you for that. Keep track of those expenses. So everyone has business expenses, and I'll talk about that a little bit more in a minute. As I said, every clergy person should have a housing allowance. You could call it a housing allowance, a parsonage allowance, a furnishings allowance, an exclusion allowance, a utility allowance. It's all the same thing, and all should be included as one lump sum.
Don, I got another question here. I'm trying to wait till the end, but they're particularly to this point that we just want to make clear. Jim asked the question: can individuals pay to UMP directly, or does the church have to pay into it?
Thank you. I should have said that. The money has to come from the local church directly to Westpath for that to be part of that. The biggest part is by doing that, when you get your money back in retirement, it's going to be housing allowance. And we'll talk about that. But yes, it needs to go from the church directly to Westpath. Excuse me. Okay, one of the things that you want to make sure you write down, because lay persons, persons who are doing your taxes, do not understand what we're talking about. First of all, the question and answer that Ken has put together, that sheet you should give to anybody, your broker, anybody who's doing your taxes. That should help them. But make sure they also either have this number or provide them the code itself. Internal Revenue Code 107 is what provides for an exclusion from gross income for the parsonage or housing allowance. It is not reported as income on your W-2, but you do add it back in, and we'll talk about that later for self-employment tax. Keep this information close by. Internal Revenue Code 107.
And one of the things I'll add too, because Don and I have talked about this in the previous webinar, is that if people set their housing allowance as part of their compensation package, if they are trying to estimate how that's going to be, they can set it on the high side, and then if they can't justify all of that housing allowance, simply report the balance as income. If they set it low, and Don, you correct me if I'm wrong on this, if they set it low, they can't do anything about it. And we mentioned about the fact that moving expenses could be included in a housing allowance, but you don't move every year. So if you keep it on the high side and get used to the fact of saying, I may have to report some of this as other income, you're in a much better place if for some reason in one year you have some, larger expenses, right?
That's correct. And I encourage clergy to make a larger housing allowance, because the things come up in the year, you don't know. The rental, the parsonage allowance includes the rental value of the home furnished as part of your compensation, or a housing allowance provided by the church. And what the parsonage allowance includes the lesser of these: the rental value of the home, furnished. Someone asked the other day, could we just go to Zillow and get that, you know, if I rented a house? Typically what I say is that value is about 1% of the value of the home per month. So if you have a $200,000 home, that'd be, the rental value would be about $2,000 a month. So you could set that as one of the values to think about, or the housing allowance that the church actually provides, which includes everything. If you have an outbuilding like a garage, utilities, maintenance, repairs. A minister can only receive a parsonage allowance for one house. At one time, not too long ago, we were able to take deductions for house that we owned, plus if we had a cabin or a cottage, we could take those expenses. That's no longer the case. It can only be in the house that you are actually living in. And it must be approved annually and in advance of using the allowance. You need to check with the conference, but to see if you're allowed, you could, according to the IRS, you could change that allowance in the year if you find that you're going to have some advance payments to make later on. But again, it needs to be approved in advance of spending that money, and it cannot make your total compensation any larger than what you set up at the charge conference.
Okay.
Again, the housing allowance is either the amount that you actually use to provide a home, the amount that's designated, or the fair rental value. The big issue is how much it actually is out of your pocket that you're spending. You can't deduct more than that. But these are things I just talked about. Yes. Yes, even though a housing allowance is used to pay mortgage interest and property taxes, mortgages and property taxes, if you itemize, is also excluded from gross income. It's almost like getting a double deduction. So if you itemize in Schedule A and you're counting mortgage interest and property taxes, actually you should include the entire mortgage that you're paying. But on Schedule A, you can deduct, again, mortgage interest and property taxes. That's double dip. Retired clergy. Everything that you get from the church's pension program is housing allowance and is not taxable income to the extent that it is spent. Also, pension income is not taxable for self-employment tax purposes or Social Security. That's a question we get quite often. Now, one of the things I like to hesitate, many brokerage persons are going to want to talk you moving your money at retirement out of the Board of Pensions, and they say they can invest it better. First of all, I think Westpath does a fantastic job. Second, church's pension that is coming from other sources, maybe it's even an IRA or whatever you have, is not housing allowance. So if you move that money away from Westpath, then you're going to end up paying taxes on it. So the church pension, what you'll get from from Westpath, you'll get a 1099-R. It's one box, it'll say what was distributed. The second box says what is taxable. It'll be blank. It's up to you to report how much is taxable because of either how much you spent, and you may have spent less, hopefully, than you're getting, then you need to make that difference and report it.
But Don, those three categories that we talked about for housing allowance, those are still the benchmark for when you retire, right? That it has to be the lesser of those three. Is that correct?
No, it isn't. It's 100% of your pension is housing allowance.
And you don't have to justify it.
Nope.
Okay.
Every year, the annual conference makes a resolution to that effect.
All righty. Can't wait to retire.
I like to say that 90% of a clergy person's life is somehow related to your work. Keep a log of what you do, mileage you use, money spent, and what you did. I know it's a pain to do that. If you ever got it audited because of your business expenses, and you don't have some kind of contemporaneous record, the IRS will decline it, and they constantly have. So keep a log. Funds reimbursed in an accountable reimbursement plan are not taxable income. Make sure it is not included in your W-2, nor do you get a deduction for it. It's free money. Don't even think about it. But all clergy have expenses not reimbursed. Sometimes you may decide to go out with a group of clergy and have lunch. If business is discussed before, during, or after, becomes a business event, and those expenses, your expenses, would be deductible. One of the interesting questions we get quite often is, what about if my spouse and I, after church, go out to dinner with a group of people from the church? Can I deduct the expenses? Again, if the event, business is discussed, and it always is, either before, during, or after that event, your expenses are deductible. The spouse's expenses are not, because the spouse would be considered a member of the church. Now, if you picked up the cost of the members of the church, their expenses would be deductible as a business expense, and probably is not something you would do at a local church. So the question is always to ask with everything: is a business event, is the expense deductible? Do I have a receipt or a record of payment? You must have a receipt for any expense over $75. Otherwise, a record of the payment is enough. One of the questions we often get, can I deduct my contribution to the church as a business expense? No, you may not. Also, sometimes clergy will say to the treasurer of the church, well, just keep my contribution, and then it won't show up as taxable income. As a stewardship person, we want to say very clearly, do not do that. None of the members of the church can do that. And you're telling the members of the church, you are not making a contribution to the church. So again, your contribution is not a business deduction, and you shouldn't do anything else to try to avoid your contribution be taxable event. All right, every clergy should be making a contribution to your personal pension plan. I know that early on in ministry, it's very difficult to do. So you can contribute up to $20,500 this year. Plus, if you're over 50 and have had years where you didn't make contribution, you can add another $6,500 to that to make the total that you could make $27,000. I encourage clergy to make those contributions as high and often as you can. As a retired clergy, those contributions made a difference in terms of the continued lifestyle. All right, some examples of what I've been talking about. If your salary, if your compensation from the church is $42,000 and you have a housing allowance of $12,000 and you've made a contribution of $3,600, then on your W-2 for wages, the church should report $26,400. That's your taxable compensation for income tax purposes. All right, that makes a difference. If you're in a 12% tax bracket, you just saved $1,872 in income tax. You just saved $540 because of your pension contribution, which means from your taxable event, if you did not do any of this, you would have paid an extra $2,412 in income tax. So that makes a big difference for all of us. Now, under self-employment tax, it's taxable income, your W-2, plus your housing allowance, minus any unreimbursed business expenses. This is something that I find that most people miss on their tax return. It can make a big difference. Let's see what that looks like. So if our taxable income is $26,400, we have to add back $12,000. And maybe if we had an extra $3,400 of business expenses, we reduce it. That means that the self-employment tax is based on $35,000. Self-employment tax is 15.3%. Half a portion of that gets deducted later on, but you can see where it really adds up. So in this example, we've saved $2,412 in income tax because we had business expenses that we reported. Figuring out our self-employment tax, we saved another $510. So our total savings, $2,922, because of some of the opportunities we just talked about. Clergy should pay 1/4 of their total estimated tax, 1/4 of it each of these 4 different dates. What you need to make sure you do is by January 15th, you need to have paid at least 90% of your estimated tax due. If you had withholding and you did estimated tax payments, 90% of what you think is going to be due has to be in by January 15th, or you may be subject to a IRS penalty. All right. To be able to do this, we need to do some financial planning. I wrote a book on financial planning for Christians back at early times, and I think it was 1989. And I changed to have a budget to do a spending plan. Oftentimes, a budget tends to be, for most people, either how much is in my checkbook, but that extra $500 that's in my checkbook is actually something that's due 2 months from now. Or a budget says, well, I'm going to budget X amount of money every month. I suggest doing a spending plan. For each paycheck that you get, either using software or just a single piece of paper saying, I'm getting $2,500 this month. This is where that $2,500 is going to go. That's what a spending plan is. Now, any money you save from the taxes could be used, first of all, to build an emergency fund. Most financial planners will say, have an emergency fund of 6 months of your income. That's, I think, impossible for us clergy. What I say is build an emergency fund, build it up. Start putting in a day's worth, a week's worth, until you build it up to at least a month of your income. That means every time there's an emergency, you have a fund to be able to go back to. Whether it's the brakes just went out in my car, or there's a medical emergency, you'd have some money to work on. After you built up that emergency fund, any money you save from taxes, use it to reduce your debt. There's two ways of looking at that. I say, one of those areas is that start at the highest interest rate on your debt, pay that off first. A second way is to start with what is the largest debt and pay that off. I like to pay off the high interest rate first because you're wasting money. Also, I'd like to say that any money that you earn outside of the local church, weddings, funerals, speaking engagements, writing, some clergy may have other ways of earning money, live on your salary. Any extra money spend according to your emergency fund or reducing any debt that you have.
Okay. So Terry and Andrea, you want me to search out some questions here for Don?
Yeah, if you would, we've got a number of really good questions.
There are really great questions.
Thank
I saw them
y'all.
coming in. And I knew we were going to get close to the top of the hour. And so if folks have gotten the information they need, maybe we can, you're free to hop off if you need to, but let's see if we can go back to get some of these. Let's see, I'm gonna go. We did answer a couple of them. Individuals can't pay into UMPIP. Can you change the distribution amounts for housing and pension from year to year?
Yes, and hopefully you should.
You should, right. On the W-2, there's a part listed as other income. Is that where housing allowance is listed, or should we keep it totally off the W-2?
I think that's a good question. I think technically it should be reported, box 14, and listed as housing allowance.
Okay. So as a district
Make a comment
superintendent,
about that. Again, sometimes I find that the W-2s include housing allowance. Try hard to make sure that doesn't happen. If it does, then under other income on the tax return, write housing allowance and do a minus the housing allowance.
Okay. As a district superintendent, what are the options with no housing allowance or accountable reimbursement from a conference salary?
I'm sorry for you.
Yeah.
You need to talk to the conference to do that. Unless the conference sets up a housing allowance, you're out of luck.
If you're in a district parsonage, you would be in a similar situation you would be in to be the local church parsonage. There'd be some expenses that the conference budget is not going to pay for, your light bulbs and your, paper towels and cleaning supplies and things like that.
Yeah, I do. I'm sorry, I confused the language. I do have a housing allowance as far as paying for the rental house that I'm in. I don't have an exclusion, and I was confusing the exclusion on that.
So your housing
thing.
allowance, go ahead, Don.
An exclusion and a housing allowance is the same.
Right.
Your housing allowance is excluded
All right, so I get a salary and then a housing allowance to pay for the parsonage, to pay for a place to live.
Right.
But they can legal. So let me ask Don this question. So the conference can legally make that housing allowance larger to also include these expenses that Mike will have in living in that house beyond the rent. Is that correct?
Correct.
Okay.
Correct. Does that answer your question?
Yeah, I was just trying to find a way to reduce the salary as accountable reimbursement, which I've always done, but don't have that option from a conference salary.
Mhm. Okay. So let's see. Many churches are trying to decrease their church budgets. As an easy expense for churches to cut are reimbursable expenses. Is there a reason why I can't deduct work expenses, books, example, from my taxes to alleviate the church from paying these expenses?
Okay, you cannot do anything about deducting it from your income tax. You can reduce your self-employment tax by any of those expenses. Unless, if you have other income and you have expenses that are directly related to that other income, weddings, funerals, speaking engagements, you could deduct it on a Schedule C against that other income that you're reporting.
Okay. So this question comes from, I guess, Jack Brutha. The names are reversed here. What if I own my own home and the church pays a housing allowance to me, but the amount they pay me is only 1/3 of the fair rental value of our home? What's the best tack for that?
You're limited to
that
the amount of
is-
money. Go ahead, Terry.
I was just going to say that is his tag is Brother Jack.
Oh, I'm sorry. Okay. Brother.
Yes.
Brother
That's-
Jack.
So you would be limited to whatever the housing allowance is, even though it doesn't cover all the expenses.
But could he negotiate next year for some of his salary then for more of his salary to be in the housing allowance? That wouldn't cost the church anything, right?
Correct.
Okay. So
I
Mike
have to have
says,
a disclaimer. Sometimes there are annual conference rules.
okay,
So we need to pay attention to that.
got it. Mike says, having retired in 2021, my local church housing allowance is to be reported on the self-employment tax form, but not my retirement income from Westpath. Is that correct? So when you say your local church housing allowance, you also, I'm assuming, Mike, you're also serving a local church at that time. Is
So
that right?
if you're serving a local
I was
church,
trying to get unmuted. Yeah, I was serving through June. And so I served a local church during 2021 and had a housing allowance. Now I'm retired and not serving. And so I have both the retirement income from Westpath and a housing allowance.
so the housing allowance for the first half of the year would apply to the church income and the expenses during that period of time. The second half of the year, your housing allowance is 100% of your pension distribution.
Okay, so the pension does not show on self-employment tax at all, and doesn't count against income for Social Security and that kind of stuff.
Correct.
That's what I needed. Thank you.
Great.
Okay, so Gina asked the question about how do you add to UMPIP if the church doesn't pay for it? And again, I think what we were talking about was, the church withholding money that they're not paying to you in your check or deposit or whatever, but sending it instead to Westpath. Is that correct, Don?
That's correct. And if it's a problem, all I can say is call Westpath. Talk to them.
The first example that says, one of the questions from Audrey, the first example in the salary is inclusive of both total compensation, including the housing allowance. And I think housing allowance is listed as a separate line there. So that is the salary and the housing allowance added on top of that. All those two together would be your, would be part of your compensation. I think that's what Audrey's trying to get at it. If I'm not asking that correctly.
Yes, you're restating it correctly. I was just trying to see in that 42,000, did it include the 12,000, and that's why you were deducting that 12,000 again?
Yes.
Okay, thank you.
Okay. So question from Larry is in retirement. Can I claim housing if I first rent with plans to buy a home later? Are the initial expenses in buying a home, mortgage fees, points, appraisals, etc., deductible above the housing allowance?
No.
Okay.
It's the cost after you really move into the house.
Okay. What about renter's insurance premium? Is that deductible?
Yes. That's
Okay.
part of the housing expenses.
Your renters, let's see. Church provides a parsonage, but no allowance for housing expenses as part of the compensation package. And that sounds to me like maybe, and that comes from Cheryl, that I find churches sometimes think that, housing, when we're asking for a housing allowance, we're asking for extra money. And it's all part of the same compensation package, which you're asking really, I think, Don, and you can that correct me, is to designate part of that compensation as a housing allowance or move more of your compensation into housing allowance, right?
That's correct.
Okay. And
Can I make a
Okay.
clarifying statement about our conference? I think that what's confusing people, I'm sorry, I'm in the conference office. What is confusing people is that if, on our compensation form, if you do not have a housing allowance, it's listed as housing exclusion. And so I think there's a mental block that housing exclusion is two different things. We just call it differently if you're in a parsonage versus a house. Sorry.
Okay.
yeah, I like the word exclusion. I mean, I know there's this is one of the big problems around housing. I did a whole webinar with Brian Mills from GCFA, who's our legal counsel, on just the housing allowance, because there's so much confusion around it. I think a big part of that confusion is that we have all these different names for it. But for me, when they say that I have a housing exclusion, it means that they're, that I live in my house, I pay my own bills, but they're excluding a part of my salary as taxable income to cover those expenses, because I'm not in a I'm not in a parsonage, I'm in my own home. And so I think the word exclusion is kind of, it's what you're leaving out of, the allowance kind of sounds like, I think people interpret it sometimes as getting more, you're getting more money. And it's really about just saying, I'm earmarking this part of my annual salary as housing, so I don't have to worry about it for the income side. I have to consider it for the self-employment side.
Don, there was a question from Ashley, or more or less a suggestion about creating a database of accountants with extra training or knowledge in this area of clergy taxes. Have you done any webinars specifically for accountants?
No, we have not. And the question about who do we go to do our taxes? Usually what we say is talk to the foundation director or the conference treasurer or the district superintendent. Oftentimes they know of people that other clergy have used and feel good about.
Right.
We have not
Yeah.
done something specifically for CPAs, accountants, tax preparers.
Would you be willing to do something like that?
Sure.
I think if it's promoted, throughout the conference, we could get a good response to it.
Sure.
And maybe then identify some folks that we would recommend.
And they're all, accountants are always looking for extra education units. So that might be something you can suggest.
Thank you for asking that, Ashley.
Mhm. Trying to go back. I think there was one or two more questions here. Jimmy Boone, part-time retired, have a weekend parsonage. The church has set up $3,000 a year, but the church pays utilities directly. My name does not appear on bills. I never touch anything. I never touch any money. Thank you. So I'm guessing his question is, they set up a $3,000 a year housing allowance, basically to cover your other expenses outside of the utilities, right? So maybe it's not a question, maybe just offer of this is how you're working it out with the church on a part-time basis, which sounds
Well, the
great.
original plan was I would have got the bills. They would pay me the $3,000 to pay the bills out of. But instead, they had already had everything in their name. So we decided just leaving the church's name. So I don't have to touch that money. I don't have to count his income in or out.
Okay, there
And
you
I just
go.
want to make sure that's, acceptable.
Good question here from Jenny is, does a pastor have to be a certain percentage part-time to qualify for a housing exclusion?
No. The only thing that IRS says is the person has to be ordained, commissioned, assigned, appointed,
Okay, so
nothing about
full-time,
time.
part-time, elder, deacon,
Right.
local pastor, all those fall into that category. Okay, I am thinking, Terry, Andrew, I think we've covered. If you can't think of anything we've missed, but I think we've drawn about as much out of Don's head as we can.
He'll
I mean,
need
there's
a
probably
nap.
more there, but
He'll need a nap this afternoon.
That's right.
Yeah. Well, I just want to say thank you so much for everyone's participation, and this has been a really good time, and just the attendance and the fact that you've all hung in there with this is a good sign. And of course, very grateful to Don and Ken for sharing your knowledge and your experience and your servant's heart. Let's give them all a webinar hand, if you will. And thank you so much for being with us. We hope to have more of these. I've been receiving some messages in the chat about ideas going forward. I think Alabama taxes was one of the things that was mentioned, but we will continue to be here for you and connect you with people who have such great experience in these areas. Guys, I don't think it could have gone any better than this. So just a big thank you from all of us.
Thank you, Terry. Nice to see you
good to be
again.
here.
Good to see you too. Y'all take care. Have a good rest of the week.